Welcome to IndAS channel, a channel to educate and promote IndAS education in India. On 30th March 2016, Ministry of Corporate Affairs has issued a notifications with respect to Companies Accounting Standard Amendment Rules 2016. Now, the most important critical thing is that from which date and year this is applicable, and two, which are the main changes. This presentation aims to cover mainly two aspects. One is on applicability and two in the key changes which are brought in by the Companies Accounting Standard Amendment Rules 2016. Let us look at first applicability. When we look at the point number 2 of notification, it says that it shall come into force from the date of notification in the official gazette. This amendment was notified on 30th March 2016. Hence, we can safely assume that these all accounting standard amendment rules are applicable from the date 30th March 2016. That means it is applicable for the financial year 15-16. However, wait, there is always a catch here, and the catch is that when we compare it with respect to the Companies Accounting Standard Rules 2006, which are the main body and which are amended by this Companies Accounting Standard Amendment Rule 2016, then there may be an issue with respect to applicability of the standards. When we refer to Companies Accounting Standards Rules 2006, it says that it shall be applicable from the accounting period commencing on or after the publication of the accounting standards. That means it can be interpreted that the Companies Accounting Standard Amendment Rules 2016 is applicable from the accounting period commencing on or after 30th March 2016. So from 1st April 2016 to 31st March 2017 it is applicable. But still it is a doubt, it is not clear. We need to wait for some clarification from ICAI or MCA. Now we can refer to the extract of Infosys annual report, which was published on 15th April 2016 for the year ended 31st March 2016. It says that the company believes, based on legal opinion, that the Rule 3 Sub-Rule 2 of the principal rules has not been withdrawn or replaced, and accordingly the Companies Accounting Standards Rules 2016 will apply for the accounting periods commencing on or after March 30, 2016. Now this is what has been disclosed in the annual report of Infosys. Now, but we have to wait for further clarification from MCA or ICA in this regard. Let us look at which are the changes brought out by this Companies Accounting Standard Amendment Rules. It changes AS2 revise, AS4 revise, AS6 and AS10 are being replaced with AS10 revise, AS13 revise, AS14 revise and AS21 revise. These are the few AS are being revised by issue of this notification. The most important change is for AS10 revise, that is property, plant and equipment. All other AS are having a few changes, only one or two amendments in particular AS, while AS10 has been completely revised, which includes now also AS6 depreciation. AS2 revise, which is on valuation of inventories. Now one of the pertinent change which is done under AS2 is that it says that it does not include spare parts, servicing equipments that meet the definition of property, plant, equipment. Now when we refer to AS10 revised, it says that spare parts to be treated and capitalized as PPE if that meet the definition of PPE. So if any spare parts or servicing equipment that meet the definition of PPE, we need to apply AS10 revise and not AS2 revise valuation of inventories. Next is on AS4, that is contingencies and events occurring after the balance sheet date. The most important change is on dividend. As we all are aware that under old AS4 and under Schedule 6 of Companies Act 1956, or there is a requirement that even if the dividend has been declared after the reporting date, but still it need to be provided for the previous period. For example, for the year 15-16, if the board meeting has held on 15th May and the dividend has been declared for the year 15-16, then dividend need to be provided for the year 15-16. Now, this is against the principles of events occurring after reporting period, which is general principle. Also, under Ind AS, it is not allowed. Now, the amendment has been proposed wherein there is no need to provide a dividend if the dividend is declared after the reporting date, because it is not a adjusting event as condition was not existing on reporting date. Under Schedule 2 of Companies Act 2013, this was already done, and the requirement which was there under Schedule 6 is now removed under Schedule 2. The same has been done also under AS4 revise. So if you apply AS4 revise, now the requirement is that dividend has to be provided only when it is accrued. That means the year in which it has been declared in board meeting and approved in AGM, in that year the liability need to be created, not in the earlier years. Next, and one of the very important change is of AS10 revised, that is property plant equipment. First thing, AS6 depreciation is now withdrawn, or we can say AS6 depreciation related provisions are merged with AS10 property plant and equipment. So earlier name was accounting for fixed assets. Now it is replaced with property plant equipment, which is in line with Ind AS 16, and now it includes both depreciation and fixed asset accounting. One of the very important point was component accounting. The component accounting was compulsory in the Companies Act 2013. It was deferred for 1 year, and for the first year, that is 15-16, it was compulsory. Now under AS10 revised property and equipment, the component accounting concept is also introduced. So now this AS10 is now in sync with the Schedule 3 of Companies Act 2013, Schedule 2 of the Companies Act 2013. Second point is spare parts, standby equipments and servicing equipments. Earlier, the spare parts need to be capitalized only when it can be used only in connection with the particular fixed assets and the use is irregular. Now, it says that these spare parts, servicing equipment and standby equipments need to be capitalized if it meets the definition of property plant equipment. AS10 revised provides the definition of property plant equipment as a tangible items that are held for use in the production or supply of services or for rent or administrative purposes and to be used for more than one period. Now, if the spare parts meet the definition of this property plant equipment, then it is to be capitalized and AS10 revised need to be applied. As we discussed earlier under AS2, if AS10 is applicable, obviously AS2 is not to be applicable. Third, very important point is about deferred payment. If the payment is deferred beyond the normal credit period, then the financing element also need to be separated and accounted separately. Another point is on asset retirement obligations. One need to create a liability of decommissioning or retirement obligations, and this need to be discounted, which is also one of the change which is brought out under AS 29, provisions contingent asset contingent liabilities. Another point is that depreciation, which we discussed, that it is now part of AS 10 and there is a compulsory requirement to have annual review of the useful life, which is there under AS 10, also in line with Ind AS 16. Change in depreciation method. When we refer to our AS 10, AS 6 old, it talks about that if there is a change in depreciation method, you have to retrospectively calculate and you have to provide prospectively. So retrospective calculations of the change in depreciation method was required, which need to be provided prospectively. Now under AS 10, which is in sync with Index 16, it says that depreciation method change is a change of accounting estimate and it is not a change of accounting policy. Hence you have to provide depreciation change prospectively, not to be accounted as a retrospectively as was required in earlier case. Revaluation model, again in sync with Index 16. For subsequent measurement, AS 10 provides you two options. One is a cost model and second is revaluation model. The revaluation model, which is provided under AS 10, is your accounting policy choice. It is not something where you can do systematic selective revaluation, which is allowed under AS 10, but here you have to apply as a accounting policy choice. Once you choose and select a revaluation model, then you have to follow it continuously to ensure that the carrying amount of the asset is not materially different from the fair value or revaluation of the item of PPE for which revaluation model is selected. Bearer plants and livestock. Now, earlier there was no mention of this bearer plant and livestock. Now, AS 10 clearly mentions that the bearer plants are part of AS 10 and you have to apply the provisions of AS 10. With respect to livestock, the accounting standard amendment says that it provides a footnote, and the footnote says that up to the stage accounting standards on agricultural accounting is under formulations, AS 10 will need to be applied. Once the accounting standard on agriculture has been notified, then it has to be applied for the livestock. There are few transition provisions which are very important, which one need to keep into mind. The reason is that as on 30th March 2016, if it is applicable, all corporates and professionals need to make a decision how to transit from the old AS to the new AS, and that's why there's a need to look at to the transition provisions. I am not going to detail transition provisions, but the transition provisions for AS 10 are: first, how to do accounting with respect to recognized expenditure in past, but under new AS it is eligible to be capitalized PPE. Second, if there are spare parts which are earlier treated as inventory, but now it is to be classified as PPE because of the definition of spare parts meets the PPE definition. Third, it also talks about exchange transactions. And fourth, in case of the revaluation, what to do on transition. These are the few points and few things which corporates and professionals need to understand when they transit from the old AS regime to the new AS or revised AS regime. Accounting for investments. Now, under AS 13 revised, it has made specifically that investment property need to be accounted in accordance with AS 10 by using cost model. It means it has made clear that for investment property one has to apply AS 10 and cost model. So revaluation model approach is not allowed, and you have to apply the cost model of AS 10, which requires you to also do depreciation on the cost model. Next point is on AS 14, accounting for amalgamation. There is a change in the definition of amalgamations. It says that it includes mergers. However, particularly it was assumed to be mergers, so we can say it's clarification in nature. And second thing is the legal override requirement. Legal override was earlier there. It says that if the amalgamation scheme which requires and provides accounting of amalgamation, in that case the accounting for amalgamation is specified under amalgamation scheme will override the accounting of AS 14. In that case, the corporates are required to provide disclosures. Now, under AS 14, it says that AS 14 accounting for amalgamation will override any accounting if it is specified under amalgamation scheme, provided amalgamation is being approved under Companies Act 2013. Consolidated financial statements. There is a lot of debate on the consolidation requirement, because under Companies Act 2013 it says that subsidiary includes associated or joint ventures. Now in that case, if the company doesn't have a subsidiary but the company has associate, whether the company is required to do consolidation, Companies Act 2013 says yes, you have to do consolidation. However, under AS 21, there was no such requirement to do consolidation if company doesn't have subsidiary company. Consequently, there is a change in AS 21 where it says that even if the company doesn't have a subsidiary, but if the company is having associated or joint venture, it has to prepare consolidated financial statements. Last point is on AS 29 provisions, contingent liability, contingent assets. As we discussed that for decommissioning, restoration and similar liabilities, it need to be done at present value, which was not required earlier. So this need to be taken into consideration.